Raoul screams about it, and he's absolutely right, I think. And Jeff Goodluck, anytime he opens his mouth, appears to support India. But the problem we've encountered in the past with investors, to some extent ourselves, is this idea that you believe an economy will grow at 8% or 10% or 3%, whatever. You invest in it and you get 0% return. And it's like a head scratcher. And all people come to is this corporate governance issue, but it's really not. It's a disruption issue that the company that worked for the last 10 years, that business model is now broken, because if they can't optimize to digitization, if they can't be efficient in manufacturing or distribution, that business model will stop growing, and oftentimes it will just disappear.
So I'm really excited to talk about some of the massive changes taking place in India and the investment opportunities that exist. But let's start off first and give me a sense of the approach you're taking. How are you looking at this?
No, it's a great question. So I think it's probably helpful just sort of step through VanEck as an organization very quickly, and because it's a sort of straight line through this to I think where we're trying to get to, which is some kind of sort of conclusion. The core mission we have here at VanEck is a partnership proposition that is basically a solutions provider, right? We're trying to find solutions that we know need to be forward-looking, intelligently designed. We subscribe to the sort of basic academic principles of diversification. So to us, kind of serving our clients best means providing optimal solutions, right? And so those are building blocks to build portfolios that they want to build themselves. So these solutions can be active or passive, and I think this is important when we get to the sort of India piece, that for relatively, it's different depending on the problem we're trying to solve, but for relatively efficient indexes, sectors, thematics, a sort of linear passive approach works well, which is sort of a GDX gold miners strategy. But then for our sort of large cap growth strategy, which is moat, there's a lot more complexity to get, in the process and architecture to get to the sort of persistent performance that we're trying to achieve through a sort of ETF wrapper. So, then you sort of come to sort of the more inefficient indexes, of which India, developing countries that we're going to talk about, is part, and an active works better, right? That's, to us, it's commodities, energy, precious metals, crypto, EM debt, and my patch, EM equity. I think the last sort of point around this is just, and we'll dig into it as we go through this, I think there's sort of some trauma associated with investing in this asset class in this country, that I think it's important to sort of unpack and explain very briefly, because I think it's going to be a big part of what we discussed, and that's this sort of notion associated with capital impairment, right? So, often it's associated, or it's, I think, wrongly attributed to poor corporate governance, right? Of course, there are governance issues in EM like there are anywhere. We've had this Adani thing recently, but Enron, FTX, Wirecard, it happens everywhere.
Sadly.
Right, exactly. But I think at the end, they tend to be exceptions rather than the rule, right? So I somewhat discount that. So ironically, I think the real actual risk is more closely correlated to the reward that people are looking for, right? This idea of growth and development. The piece I always talk about, the piece of sort of emerging market that's important is emerging, right? So as these countries emerge and develop and really go after the inefficiencies that we've pretty much bled out here, this sort of this idea of modernization creates massive index churn, right? So put simply, like, an index is a snapshot of today, right? Almost entirely reflects what has happened, right? So in a rush to sort of gain exposure, investors tend to think they're buying the future, but they're not. They're buying huge slices of what has worked in the past and what will probably not work in the future as a result of what they're trying to invest in, which is future change, right? So it's a sort of complicated, nightmarish thing. So I think, again,
I like the idea that it's a snapshot of today, though. I think people can wrap their head around that. Let me ask you, as you approach this. So first of all, active management would have been maybe harder to talk about that even a year ago, but all we're hearing now is that we are entering an era of active management. So that kind of fits into the landscape we're in. When you're talking about that sort of snapshot of today and you're going to be seeing a lot of change, does that mean your time horizon has to be short term or shorter term? Or do you have to have a long-term view in a country like India, but you've got to be making constant shorter term adjustments to the narrative as it's developing?
Yeah, that's an awesome question again. It's about context, right? I don't think you can take anything, whether it's kids' life or this proposition, without context. And I think that's where we're going to go with this. And context has varying durations, right? And varying opportunities to it. So, time arbitrage is a really interesting place to go looking for alpha. But I think time arbitrage is not just a discipline. I think it's an imperative, because if you understand where we will be, and again, this is sort of the VanEck issue of forward-looking intelligent design solutions. If you've got a good idea where you're going to go, and with developing countries specifically, there's proven analogs that we know and understand. Like, I mean, e-commerce is obvious, right? It's going to happen everywhere, fintech. But it's sort of trying to understand how to get there, what the sort of localized solution is. And that involves, it's a combination of really having a thesis and a view that this logically makes sense, and it's built out from an understanding of the past, the current, present, and potentially the future. But then it's sort of bringing that back to the present and understanding which businesses can, mathematically and from a point of view of sort of management and innovation, really capitalize on those. So I think it's a sort of multi-horizon thing. But I think the important point, and again, to this conversation, is about, why is it an opportunity? Why is it such a great opportunity? And how do you sort of think about de-risking yourself? And I think that's to that whole point of this disappointment that, Raoul screams about it, and he's absolutely right, I think. And Jeff Goodluck, anytime he opens his mouth, appears to support India. But the problem we've encountered in the past with investors, to some extent ourselves, is this idea that you believe an economy will grow at 8% or 10% or 3%, whatever. You invest in it and you get 0% return. And it's like a head scratcher. And all people come to is this corporate governance issue, but it's really not. It's a disruption issue that the company that worked for the last 10 years, that business model is now broken, because if they can't optimize to digitization, if they can't be efficient in manufacturing or distribution, that business model will stop growing, and oftentimes it will just disappear. So it's this sort of idea of going back 20 years and saying, should I own Intel or Microsoft? Should I own GE or Google? That's the sort of core, I think, of this conversation. I think that's a big missing piece when it comes down to India, which feels to me like one of the biggest opportunities globally for the next, I want to say, decade, probably more.
Well, I think it's really important to have a sort of understanding of the framework you're operating on, before we launch into the narrative of India. So what is there an investment thesis that is defining your approach? How are you looking at this from a thesis point of view?
I think it's, a lot of what I sort of touched on before, which is understanding the power of disruption and understanding the opportunity set. And, that is the demographics that everyone knows about, very low median age. That's sort of the reform process. That's sort of low household income levels, likely to go higher. But I think it also includes understanding this reform process that is deeply powerful. It's sequential. And I think it's sort of really getting to the point that this country is something we haven't seen before. And that, it sets in train a kind of sort of Hemingway sequence of sort of gradually then all at once. That it's unprecedented change. And I think when you sort of strip that back, what you see is social change, economic change, political change, all happening at the same time.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.